This didn't just happen by accident, and if you think today's gold and silver crash was random, you're about to see a picture most people are completely missing. What you're watching right now feels shockingly similar to 1980, and yes, Donald Trump's shadow is all over this moment. Right now, as you're watching this on Sunday, the markets are unusually quiet on the surface, but underneath, something big just snapped. Gold and silver didn't simply fall, they were pushed. Most mainstream channels are calling this a normal correction, but deep down, you can feel that explanation doesn't sit right. Corrections don't come with this much fear, speed, and silence. If this is your first time here, welcome to Bullion Alert HQ, where we don't rush headlines, we connect dots. And before we go deeper, take a second to like this video and subscribe, because what you're about to hear over the next hour could change how you look at metals forever. Now, stay with me closely, because this story doesn't start today or even this week. It starts months ago, quietly, when signals began flashing that only long-term market players usually notice. Back then, gold was climbing steadily, silver was gaining confidence, and retail investors finally felt like inflation had met its match. The mood was hopeful, almost comfortable, and that's usually when markets set their traps. In 1980, something very similar happened. Right before one of the most brutal reversals precious metals had ever seen. People thought gold was unstoppable back then too, until policy, power, and pressure changed the rules overnight. Fast forward to now, and suddenly Trump is back in the center of economic conversations. Not just as a political figure, but as a symbol markets react to instantly. Whether you love him or hate him, one thing is undeniable. Markets move when Trump moves. And this time, the movement came before the explanation. Late last week, unusual volume started hitting gold and silver futures. Not emotional selling, not panic yet, calculated selling. That's the first red flag most people miss. Real crashes don't start with fear. They start with confidence being quietly removed. Big players don't dump metals loudly. They do it when liquidity is high and attention is low. And right now, attention is scattered everywhere else. Elections, headlines, social drama. That's the perfect cover. Here's where it gets uncomfortable. Trump's recent statements about the dollar, trade dominance, and restoring strength weren't just political messaging. Markets heard something else entirely. They heard policy pressure coming. When a strong dollar narrative starts forming, gold and silver immediately feel threatened. Not because metals are weak, but because leverage hates uncertainty. This is exactly what happened in 1980. Confidence in policy returned suddenly, rates changed direction, and metals were sacrificed to restore control. People who held gold back then thought they were safe. They were right. Long-term, but short-term, many were crushed. Now ask yourself something honestly. Does this drop feel emotional, or does it feel engineered? Because emotional crashes come with chaos. This came with precision. Silver didn't just fall, it was pressed down in layers. Gold didn't collapse. It was guided lower. That's not retail behavior. That's institutional choreography. Some analysts are already blaming profit-taking. But profit-taking doesn't erase weeks of momentum in hours. This feels like a message, not a market reaction. And messages are always sent by someone with power. Think about the timing. Trump headlines intensify, dollar confidence spikes, metals stumble hard. Coincidence is a comforting word, but markets rarely work that way. Back in 1980, the betrayal wasn't obvious until it was over. By the time people understood what had happened, positions were already underwater. And today, the same psychological playbook is being used. First confusion, then reassurance, then silence. If you're feeling uneasy right now, that's not weakness. That's awareness waking up. Most viewers will stop watching after a few minutes, thinking they've got the idea. But the real story hasn't even started yet. Because the real question isn't why gold and silver fell, it's why they were allowed to rise in the first place. Hold that thought. Let it sit. In the next part, we're going to look at what happened behind the scenes before this drop, and why this may not be the end of the move, but the middle. And while you're watching, I want you to do something quietly. Think about whether this drop scares you or sharpens your focus. If you're still here, comment below with just one word: watching. Don't overthink it. That simple action tells me you're paying attention, not reacting emotionally. And if you know someone who's confused or shaken by this crash, share this video with them now. Sometimes clarity is more valuable than comfort. Stay with me, because what comes next explains why this moment could define the next decade for gold and silver. The biggest mistake most investors make is assuming crashes begin at the moment prices fall. In reality, crashes begin much earlier, when confidence is quietly manufactured. Before this drop, gold and silver were allowed to rise just enough to pull belief back into the market. That belief wasn't accidental, it was bait. When retail investors feel safe again, liquidity improves. And when liquidity improves, institutions gain freedom to act. This is where history whispers warnings, not headlines. In 1980, metals were praised right before they were punished. Back then, people were told gold was protection, silver was insurance, and inflation had finally been defeated. What followed was not protection, but betrayal. Right now, the same emotional cycle is repeating. Optimism returned just long enough to make the fall hurt more. Let's talk about Trump again, because ignoring his role here would be dishonest. Markets don't wait for elections, they price expectations. When Trump signals strength, dominance, and control, markets translate that into a stronger dollar narrative. And a stronger dollar is kryptonite for leveraged metals positions. This doesn't mean gold and silver are suddenly worthless. It means short-term players are being flushed out. That distinction matters more than most people realize. Long-term value and short-term pain often arrive together. Watch how fast sentiment changed. Just days ago, gold was called unstoppable, and now it's being questioned again. That emotional swing is not natural. It's engineered through speed. Silver's drop tells an even darker story. Silver always falls harder when the goal is shock, not balance. Silver isn't just a metal, it's a signal. When silver breaks suddenly, it's meant to scare people away from conviction. Back in 1980, silver's collapse crushed confidence for years. That's exactly why its movement today matters so much. Now notice something subtle. There was no clear news catalyst strong enough to justify this magnitude of selling. No emergency announcement, no sudden disaster, just pressure. Pressure without explanation is how markets test belief. Those who panic fail the test. This is where most viewers unconsciously decide their future. Some close the video and accept fear. Others stay and seek understanding. If you're still listening, that already puts you ahead. Awareness is the first layer of protection. At Bullion Alert HQ, we don't rush conclusions. We slow the moment down until patterns reveal themselves. And here's a pattern worth noticing. After every engineered drop comes a narrative cleanup phase. You'll start hearing phrases like healthy pullback and resetting expectations. Those phrases exist to calm exits, not to explain truth. In 1980, reassurance came right before deeper damage. Calm words were used while positions were being erased. Ask yourself something quietly. Who benefits if you sell now? Because it's rarely the person reacting late. It's the one who planned early. Gold and silver didn't lose relevance overnight, but many investors are being pushed to lose patience. This moment is designed to separate conviction from comfort. Comfort leaves first. Here's where curiosity matters more than certainty, because the next move isn't about price, it's about timing. And timing always favors those who understand the setup, not the noise. In the next part, we're going to talk about what happens after the betrayal phase. Not fearfully, but realistically. Before we go there, pause for 1 second. If something in this feels uncomfortably familiar, that's not coincidence. Drop a comment with the word aware if you feel the shift happening. No explanation needed. And if this perspective is helping you stay calm instead of reactive, share this video with someone who needs that clarity today. Stay right here. Part 3 is where this story turns from confusion into strategy. Most people think the betrayal phase is the end of the story. In reality, it's the point where the real game finally begins. After engineered drops, markets don't rush upward or downward right away. They pause, watching who remains. This pause feels uncomfortable because it removes certainty. And uncertainty is where weak conviction exits quietly. Back in 1980, this was the moment most investors emotionally gave up. Prices didn't recover fast enough to restore hope. Today, the setup feels eerily similar, not because history repeats exactly, but because human behavior does. The loud sellers are gone now. What's left is silence, patience, and positioning. This is when institutions stop pressing down and start observing reactions. They want to see who still believes without reassurance. Trump's presence amplifies this stage. His words don't need to cause action anymore. Expectations already did the work. Markets have priced in strength, control, and dollar dominance. Now they're waiting to see if belief holds. Gold and silver aren't being punished anymore. They're being tested. A test doesn't ask questions loudly. It watches responses quietly. Notice how coverage starts fading. That's intentional. When headlines disappear, emotional investors lose direction. Calm thinking requires effort. At Bullion Alert HQ, this is where we slow everything down, because speed is no longer your enemy. Impatience is. If you zoom out, nothing fundamental about gold has changed. Debt still exists, deficits still grow, and uncertainty still lives. Silver's industrial demand didn't vanish overnight, but perception is being reshaped carefully. Perception moves faster than truth, and that gap creates opportunity. This is where many people make a silent mistake. They confuse discomfort with danger. Discomfort simply means clarity hasn't arrived yet. Danger comes from acting without understanding. In 1980, those who survived emotionally were the ones who stopped chasing headlines. They started watching structure. Structure today shows pressure easing, not increasing. The most violent moves already happened. That doesn't mean prices jump tomorrow. It means forced selling is largely complete. Now comes the patience phase. And patience feels boring compared to panic. Boring phases build wealth quietly. Emotional phases, destroy it loudly. If you've stayed with this video till now, you're not here for excitement, you're here for understanding. And understanding gives you control. Control removes fear. This is why the betrayal matters. It cleans the board. Only after belief is shaken can a new narrative form. That narrative won't announce itself loudly. It will arrive slowly, quietly, almost invisibly. Just like this drop did. Before this video ends, I want you to check in with yourself honestly. Are you reacting or are you observing? That answer matters more than price charts today. Observation creates long-term winners. If this perspective helped you stay calm and focused, leave a comment below with the word steady. Nothing more. Your comment helps this message reach others who need clarity, not panic. And if you know someone who's confused or shaken by this crash, share this video with them now. Awareness spreads faster when it's shared early. Thank you for spending this time with Bullion Alert HQ. Stay aware, stay patient, and stay curious. Because the next big move won't reward the loudest voices. It will reward the calmest minds.